A bigger crash is coming. Investing in the stock market has become so popular these days that it is a trend. So if you're both into watching movies and investing in stocks, you might have watched the movie Big Short released in 2015 or at least heard about it. The movie's protagonist is based on Michael Burry and is played by Christian Bale. It is a retelling of the 2008 incident in which Michael Burry predicted the subprime mortgage problem that transpired between 2007 and 2010. So do you want to know what this investor has predicted this time? Then watch this video till the end. Here we begin. Let's start with the basics. The term Big Short pertains to the trading or investment process of shorting or trading short. Michael James Burry was born on June 19, 1971, as an investor, physician, and hedge fund manager of Indian origin. He established the hedge fund Scion Capital, which he operated from 2000 until 2008 before shutting it down to concentrate on his private investments. He is competently known from subsisting amongst the early investor to foresee and profit from the economic crisis of 14 years ago. During that time, Michael Burry intelligently took a big wager on the housing market. When the market exploded in 2008, he earned $100 million from it, and the investor in the Michael's fund also made over $700 million. During the mortgage crisis of 2007 mortgage crisis and the economic crisis of 2008, several banks crumbled and hedge funds slumped. Burry's fund made a lot of money, earning his investors billions. Burry recently sold off his stocks except one, indicating that the crash is near. Additionally, on August 31st, he set an S&P 500 chart showing an 18% drop from its December 2021 peak. He asked his Twitter followers that despite the chart, he keeps getting asked when it will happen. Furthermore, Burry's warnings appear prophetic in retrospect as the correlation between cryptocurrency markets and the stock market has grown. He warned that the problem with cryptocurrency is reckless borrowing to fund specific coins and that a crash in one market could potentially lead to another, making it the mother of all crashes. Another doomsayer has joined Burry in predicting a market crash, specifically Jeremy Grantham claims the recent stock market rally is just a bear market rally. In his research note titled Entering the Super Bubble's Final Act, he claims that the combinations of overpriced assets and the Federal Reserve's fight against inflation could lead to a market crash. It is not easy to predict what will occur. However, Burry has a history of making precise predictions that often appear prescient in retrospect. Because the broader markets are experiencing increased volatility, market participants should focus on firms with strong cash flows and competitive moats if they intend to stay in the markets despite the doomsayers' predictions. Burry blamed the recent asset price inflations on the passive investing boom. In a flurry of since-deleted tweets over the weekend, Michael Burry warned that US stocks would fall further compared the current market downturn to the start of the dot-com crash, and predicted that many investors would suffer painful losses. In a follow-up tweet, Burry accused index funds and exchange-traded funds of mindlessly driving up asset prices. He also likened the market to a crowded theater, predicting that many investors would be crushed as they rushed for the exits. The difference between now and 2000 is the steadily invasions of the passive investing bubble over the last decade, he wrote. Every theater is packed, and the only way to get out is to trample each other. Even so, the door is only so big. The investor who recently liquidated his entire portfolio of US stocks except one believes the worst is yet to come for the economy. Federal Reserve Chairman Jerome Powell reiterated on August 26 that the central bank would continue aggressively raising interest rates to combat inflation. According to some experts, this monetary tightening will result in a hard landing for the economy or a recession. Burry didn't waste time pointing out potential economic red flags, such as a household debt crisis that pose a serious threat. Burry predicts an impending crash. Net consumer credit balances are rising at record rates as consumers chose violence over spending cuts in the face of inflation, was informed by the legendary investor. Nearly 3 weeks later, the financier did it again, this time with a bleak market forecast. Indeed, he is saying that a stock market crash is a matter of when, not if. Yet I'm constantly asked, when crash? Burry shared a Bloomberg chart of the S&P 500's movements since 2017 on August 31st. He highlighted that the stock market benchmark had fallen 18% since its December high on the graph. Burry has already been right this year. Burry appears to believe that a stock market crash is imminent. Based on previous crashes, The investor predicted in May that the S&P 500 would fall to 1,862 points in the coming years. The index was around 3,908 at the time of his call, representing a 52% drop from there. His pessimism stems from creating the greatest speculative bubble of all time in all things in the summer of 2021. This is especially true because small investors piled into meme stocks and cryptocurrencies, heralding the mother of all crashes. So far, the financier has been correct. According to data firm CoinGecko, the cryptocurrency market has lost more than $2 trillion since its peak last November. Bitcoin, the most valuable digital currency by market capitalizations, has lost more than 71% of its value since its peak in November. Since January, the S&P 500 and Nasdaq have lost 18% and 25.4% respectively. Burry's message received a lot of attention on social media. Some users noted that the stock market has had a terrible year, while others were convinced that a crash was imminent. Let us know your views in the comments and subscribe for more.